Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large-cap growth and also one of the best-performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me is Chris Dearborn, Managing Director of Nasdaq's Market Intelligence Desk. Chris, it seems as if a reversal in reopenings in the United States is not going to stop the Nasdaq-100.
Tech has been a driver of this rally, and the Nasdaq-100 has been one of the beneficiaries of that rally since the March lows. Anything you've thrown at this index, whether on a macro level, pandemic-related, otherwise, hasn't slowed it down. You've had clear-cut leaders, but what we're looking at now is those leaders continue to be the workhorses of the index, but you're seeing a number of other companies following along, making suit. And the number of companies making new 52-week highs today is unbelievable, especially in this environment.
All right, Chris, let's take a look at our first chart of the day for a little bit longer-term outlook year-to-date with some Fibonacci levels to discuss.
Absolutely. So we made a new all-time high today, 10,625, a little bit north of that. We're trading about 1050. Right now, and what you're looking at, we talked about last week and the week before. I've always kept mentioning the RSI. So you're looking at the relative strength of the index, and it's been hovering above or right below that 70 level, and 70 is an overbought condition. Today, on a year-to-date basis, it's trading at a 68, 69. It's pulled back a little bit on a one-year basis at 72, and if you go out a little bit further, it's still right there. So there's still room to run. We haven't been consistently in that oversold territory, which is telling me that the index continues to make higher highs, and that's always a bullish item for the index. You've got a number of different members carrying that weight, but you've also got a number of the members that don't make as many points coming through. Right, the workhorses have continued to be Apple, Amazon, Microsoft, three of the biggest leaders and point contributors to the index, we'll talk about that on the heat map, but north of 100 points already. But if you look at some of the other stocks that make up the underlying, ADSK, Adobe, Lam Research, they're all trading 15 to 30% above their 200-day moving average, which coincides with the NDX, and they also made an all-time new highs today too. I mean, you've got Tesla in there, which is up 10%. Zoom's making a new all-time high, NVIDIA into it. So what you're looking at is the broader index has a number of different horses that are running very, very well. And it's not just the ones who let us out of those March lows. And, since the March lows, the index is up over 50%. How much more can it run? And the answer to that is it's got plenty more room to run.
Yeah, it's going to run until it doesn't anymore, that's for sure. And Chris, if we take a look at your heat map this afternoon on our next slide here, it's going exactly back to what you were saying before. Amazon hitting 3,000 for the first time in its trading history, and all the big ones, Apple, Amazon, Microsoft, Google, all up at least 2%.
Right. Tesla's a big surprise here, trading north of $1,300, right? So what you're looking at is Amazon, on the classification of the consumer name, Tesla's similar to that. You've got Netflix on the consumer side as well. Facebook is starting to rally back up from the issues they've had recently. But look at the rest of the companies that are up there: Costco, Baidu, Cisco, Comcast, Adobe, all adding to these point totals. Even if Amazon wasn't up north of 4%, if Apple wasn't up over 2%, if Tesla wasn't up 10%, you still have plenty of underlying holding us up. And the companies that are detracting a little bit here, you've got PayPal, Amgen, Dollar Tree, all only down, a point and a half. Dollar Tree's off a little bit more and other concerns, but that only carries a point to the downside. So as long as the heavyweights keep moving, and again, this can reverse significantly. Something happens here, and you see impacts to Microsoft, Tesla, Apple, Amazon, Facebook, Netflix, Google, and they're down, 2, 4, 5%. This index will roll over again. Again, it's market cap weighted. The big boys are leading. Those trillion-dollar valuations continue to move, but a lot of these stocks are trading well north of their 200-day moving average, have rebounded nicely from the March lows, and continue to run. And as long as that happens, that RSI doesn't get pushing 75, 80 on a consistent basis, you're going to continue to see this index make higher highs on slightly positive news or less bad news.
All right, Chris, thanks for joining me as always on Trade Talks.
Thank you, Jill.
All right, and thanks for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.